myself. Two gentlemen who understand this very well and do it for a living. Joining us now, Chandan Taparia from Motilal and Rohit Srivastava, more of a positional guy. He's also joining us. Rohit and Chandan, thank you very much for your time. Chandan, let me come to you first to start with. What is the positioning right now? From last hour of trade yesterday, which saw panic, we recovered 150 point in first 5-7 minutes today. It was a gap up, then build on the gap up, and then erased everything. VIX also came down. Tell us, what does the data show as of now, long short side, and the cracking of VIX, though elevated at 22, but lower than 25. What does it mean?
Yeah, thanks for having me. We have seen a profit booking decline in last 4-5 trading session, and supports are slightly shifting lower. However, we are at 23-24 weeks, so while swing of 200-300 points intraday cannot be ruled out. As of now, the next support for index goes at 50-day exponential moving average, and that comes near slightly below to 22,500 zone. And then major support goes at 22,222, which was the earlier important level, which supported the market to get the breakout. If I look at the data setup, volatility is slightly down by 4-5%, but we have seen fresh call writing at all higher strike. I see the call writing at 22,700, 22,800, and till 23,000. So because of the call writing, upside is likely to be kept. However, at the same time, we are witnessing some put writing at 22,300, 22,200. So as per the options OI, the wider trading range for the index is likely to be in between 22,200 to 22,800 zone. But as of now, the weekly setup is getting some negativity, and daily trend is making lower highs, lower lows. So till it doesn't surpass 22,750, 22,800, we'll use the sell on bounce strategy in the market to play the broader range between 22,222 to 22,800 levels.
Positioning. Let's go to Rohit. Rohit, for a moment, let's address the event with what should be done if I want to play the long trade. My assumption is that BJP would come with clean majority, unlike what the street is thinking right now, and I want to play a long trade. Naked futures may not be a great idea. So how should I play it on the options? And then we'll do the flip side. If I believe that no, they may actually come with very weak numbers, or maybe the performance may not be that good, I want to play the short side. So on both sides, what should be the right trade?
So, sometimes if one thinks about this, and if we keep both options open of, good, I mean, getting the majority, not getting the majority, and I'm saying BJP standalone, then you would end up buying a straddle. But then in this situation, what happens is, and what we've seen in both the past elections, is that IVs drop within the next 3 days of the election results by almost half. So imagine the IV, which is currently 23, goes back to 12 or 13. And that means immediately you get a loss in your long option position. So the only way that you can play this on the option side is you simultaneously sell some out of the money calls and puts also along with your straddle, because then at least you will benefit from the option decay. Because a very big move in the market will only happen if the numbers are wildly one way or the other. If they are not, then you end up in a situation where IV drops, premiums drop, and the buyer doesn't make much. So selling some options and creating a spread can help you on that front. So that's what you would do if you're an options player and trying to play this election result. But the way I think about it is that broadly, I think no one is really expecting a complete change in government. What you're really thinking is, whether they will, get the majority, and then will it be a big majority or small? It's all about, the variation is between 290 and 350 or something like that for the BJP standalone plus NDA. So if that's all you're betting on, you're not betting on stability of government, which is sort of being a given if that is what the street expectation is. And if stability is given, then post the market volatility around the event, eventually markets are going to pick up. That is what I think. And the positioning also may end up looking like that, because right now, to the surprise of many, the FII positioning ended up being extremely short. Now, what that tells us is that if there's a bigger short in the next couple of days, then that would become a situation from where you can get a short squeeze. But that's only post-event, because till that point of time, they could even be right that, okay, if the numbers are not met, or they are only marginally, or they are less than last time, but they're still got a majority, the market may sell off for a day or so on that. And you might see IVs decline. Both of these things would happen. So that's the very short term. But eventually
Now
you
and-
find support somewhere and pick up.
But
That's
Rohit, between now and the rest of the day, and how the exit poll would be interpreted in the first 2 hours on Monday, is the trade duration, for example. If one, and looking at the screen right now, clearly it's tilted on the short side. FI retail both has gone short. Obviously, we've erased everything since morning gains. If one were to buy, say 500 point out of the money call options on the Nifty, assuming that the polls would show big, strong win or comfortable majority, which you are saying. The question is not whether win or loss, but the question is the quality of win by BJP as depicted in the exit poll. Then only one will make money. If there is scraping through, and that's what the biggest outcome is from the poll, probably the call option will not move only. Is that the right way to look at it?
Yes, that's what will happen. In fact, the call could even go into a loss, because if we are betting so much on just the number possibility, on a one-day basis, the market would go the other way if the numbers are not meeting expectations. And so till the actual numbers really come out, markets would remain jittery. That's the main point.
500 point lower put options, assuming that the poll is showing either scraping through majority or a very weak quality win. Even from here on, though the put option will not be cheap, it will be expensive right now, the entire tilted towards downside. Is that a good strategy at all to play?
Well, the good news is that by Monday, the VIX is not going to decline too much, right? It is going to remain in this 23, 24 range. So you will not, at least you will not lose because of time. The only thing you would lose out on is whether the actual numbers that come out in the exit polls are favorable or not. So that's all then you're betting on. And a bet on that should be nominal. I mean, you should not over bet on it, because it's very hard to guess, what is, and for all poll numbers could be all over the place. There could be 3 different, poll results coming out, which are, giving completely diagonally opposite results. And so then what would you judge? So eventually the market would go flat and wait for the actual outcome. So that is why I think it's looking like a tough bet. Unlike the last 2 times, the markets always anticipate the result outcome. That's what we have seen previously, because they rallied in 2014 ahead of the results. Even in 2019, they were down in the last week of April, but somewhere in the first week of May, they rallied into the result dates. This time around, while we did see that initial pickup last week, we've sort of given back a lot of those gains. That is where this time is looking very different. The positioning is also different. The last time FIIs were long, this time they are short, which is again diagonally opposite to what we've seen the last 2 times. Which is why the expectation also is that maybe the market behavior will be different from what it was the last 2 times. It won't just stay up there. It may even drop if the numbers don't meet expectations. But I think the only thing that we are able to say is medium to longer term, it finds support somewhere. So we can put a worst case to the bottom side. Like I would say, if at all it drops too much, how far can it go down? I would say around 21,500. Top side, it would be closer to the recent highs only, maybe 23,200. So this is a very broad range within which you would be trying to play the next 2 days.
So let me break it in 2 parts, and then I want your strategy, which you are actually recommending today to your big HNI clients there. The trade which is on right now and needs to be unwound in the first hour of trade when we open on Monday, that part first, and the actual election trade, which is say in the second half of Monday onwards to your Tuesday morning first half. So tell me the first trade. What are you recommending right now?
The strategy which we suggested, we are playing for 2 things. First, for theta decay, with the view that market may be in a broader range, but IV collapse will happen. Second, we want to hedge the position because the setup has taken a pause, and if market drifts below a key zone, then some profit booking decline may be there. So what we have created in the 27th of June, that is the monthly expiry, we created 1,500 points bear put spread in Nifty. So the strategy is all about buy 22,500 put, sell 21,000 put, with the view that if market corrects, it may drip down, but not expecting any decline towards 21,000. So this is what we are doing. And for the entire this strategy, the cost of the portfolio will be around 1%. Second strategy, which we initiated, is sell at the money calls and puts, like selling 22,500 calls and put, and hedge by buying 1,000 points OTM strike. So in that scenario, you need to sell 22,500 put and calls and buy 21,500 put and buy 23,500 call. So we are playing with two things. One, to hedge the position. Second, to get the benefit of theta decay. Now coming to your first question, that what to trade now for next few hours or to unwind. So looking at the trade setup, I'll go for intraday if I have to go with the direction, that I'll go with the negative side. With the view that market is forming the lower highs, lower lows from last 3-4 days and trend is turning lower. So I'll go with 22,300 put. However, one need to keep in mind that decay may happen fast if you carry the position overnight. But I want to play with the trend setup, which is slightly negative now. So I'll go with 22,300 put, which is now near 275 levels. I'll buy this put near 222.30 with the view that once it can hit towards 350 marks.
Very quickly. So that's your trade. The tilt is on the downside, clearly. What would your trade be, Rohit? How would you play this? Are you playing it at all, or observing, or have you recommended some trades?
Yeah, right now I would not want to play it. I mean, the play really was, I think, between 13th of May and probably early part of this week, Monday, Tuesday, where we peaked. Now that it is sold off so sharply, sorry, ahead of the event, I would really think that it's better to wait and let the VIX drop, because I wouldn't want to fight the volatility game when we are really trying to take a directional view. So it is better to really let that happen and then take a directional view post the event is how I'm thinking about it.
0.5% in trade today. But yes, you may have, you have played the direction trade much ahead, actually going into the event. So that's fine. But gentlemen, thank you very much for helping us understand how to trade this market purely on the FNS side ahead of the big event. Chandan and Rohit, thank you very much. This is a wrap from Aisha and myself. Thanks for watching. Goodbye.